and welcome. You have tuned into Buy Now, Sell Now on ET Now. I'm Srishti Sharma and with me Cheryl D'Souza. And viewers, this is the show where you get answers for all your stock-related queries. In a short while from now, we will open the stage to get all your stock-related queries answered by the experts. But before that, let's have a look at what the markets are up to. So Cheryl, quite a volatile day coming in. But the good part is that at least for Nifty, we are flattish and the Bank Nifty is showing some green onto the screen.
Absolutely. A very good morning to you, Srishti. And it was a better and a brighter day at least an hour ago because you had the markets at least in the positive territory. Now we are drifting lower actually. It was the day's lowest point coming in for the benchmark indices. Nifty Bank is still holding to the shade of green. Advanced decline ratio still in the favor of the gainers as we speak. Talking about the list of gainers at this point in time, you have a lot of metal players that are actually seeing good upbeat or good strength in trade today. Remember that while we were on a day off, you had China that announced some sort of an economic aid, and that seems to be the reason why the metal counters are actually seeing good strength in today's trading session. Talking about the gainers then, Hindalco, Tata Steel, JSW Steel are among the top gainers on the Nifty, followed by SBI, LTI, Mindtree as well. While on the losing end, it is Infosys that's taking pretty easy in trade today. 1.7% down coming in for Infosys, followed by Apollo Hospitals, NTPC, Cipla as well as HDFC Life. And Cipla also the point to note is the fact that there was a report in the Economic Times that most likely that stake sale talks along with Torrent Pharma may have taken a break due to valuation. So that's also one of the reasons why Cipla could be under pressure in trade today. Talking about the sectoral indices then, almost all the sectors, defensives are actually taking it easy. So you have IT index and FMCG index that are in the negative territory. Add to that list, you also have realty that is actually seeing a shade of red right now. While on the flip side, it is the metal index, undoubtedly the top sectoral gainer in trade today, followed by PSU Bank. You have the broader markets holding on to strength today. You have small cap index that's trading with gains of as much as 1% as we speak, while mid cap is trading pretty flat.
Okay, so that's how the markets are up to, but let's shift focus to the earnings because we are in the thick of earnings season, and now ICICI Securities has released an interesting report on the results so far. What are the sectors showing resilience and the ones that have come out weak? What trend are emerging from the quarter gone by? Let's go across to Vinny at the wall to break down the report for us. Take it away, Vinny.
Talking about the Q2 FY24 numbers so far. Now, ICICI Securities is talking about the profits first, the free float profit for the NSE 200 excluding HDFC Bank. That has seen a growth at this time so far of 24% during the quarter. And obviously in terms of cyclicals like an NBFC banks, industrial, discretionary consumption, they have provided robust business growth is what the highlight is coming in. So good growth seen in these four sectors. Other than that, cost pressure, that's been limited, resulting to a strong profit growth for most of them. So limited cost pressure, improved profit growth, while what the other highlight is coming in, whether you look at stocks like a defensive stocks, which is related to IT and FMCG and insurance space, they have delivered a muted growth this time around. Most of the companies so far have delivered muted growth in these quarters. Now, also in terms of key macro trends that one has actually seen coming in is one, IT hiring, that has been weak. Rural demand, not a recovery that is seen coming in across sectors as of now. So weak rural demand. Robust capex plans, that's what most of the companies have highlighted as well. Higher end, discretionary spending, that's there. There's NPA, systematic NPAs, that is a focus coming in on as well. Moderate cost pressures coming in, as well as in terms of focus is going to be on new technologies such as digitalization, generative AI. Lot of commentary coming in on that front as well, and even in focus coming in on EVs as well. Now, most of the stocks within their universe so far thereby are seeing a limited reaction coming in, and that's the breakup that you can see in terms of the earnings beat and what is muted as of now. So most of the earnings we are seeing has remained quite muted or below or miss expectations. Only beat is coming in the lowest levels in terms of the Nifty. Only 3 Nifty companies have beaten the estimates of the street so far.
All right, thank you so much for that, Vinny, for outlining the Q2 earnings as of now. And that's the note coming in from ICICI Securities. But let's move on and let's get you a mega ET Now exclusive story right now. And we learn from highly reliable sources that Vodafone Idea is likely to get fund infusion quite soon. For more details, let's actually quickly head across to my colleague Anurag, who's picking up all these exclusive details. Anurag, what are you picking up from your sources with regards to Vodafone Idea?
Yes, so Vodafone Idea is likely to get at least $1 billion of fresh funding, and now this plan is in the works. And the way this is likely to work out is that the financing is going to come from Aditya Birla Group entities, and there are talks on significantly with an overseas investors, and these talks, sources tell us, are at an advanced stage and could close as early as in a month. And the remaining funding is going to come from banks in the form of debt and loans. Now, Vodafone Idea has been cash strapped for a long time, and one of the preconditions in 2021, when the government had come out with the restructuring for telecom companies for Vodafone, was that the promoters need to bring in more money into the company. And in August, Vodafone had informed the exchanges that it has assured financial support to the extent of up to 2,000 crores from the promoter group entities if there is a requirement.
All right, thank you so much for that, Anurag, for getting us that exclusive details on Vodafone Idea that likely to get a fund infusion of as much as $1 billion is what our sources are telling ET now. Also, if you look at the stock price of Vodafone Idea, did react to that story, but now giving up some of those gains that it posted right when the story had broken on ET now. But what's the market setup looking like? Which are the sectors that are standing out the most on the technical front? Which direction will the Nifty tilt to? Let's get on board our experts today. We have Vivek who's joining us on the fundamental side today, and we have Kunal Bothra as always on the technical front. A very good morning to you, Vivek, as well as Kunal. And wow, Vivek, actually I'm stumped. A brand new look, is it, on the occasion of Dussehra?
See, this is the fallacy which AI has. So I had to approve my ID in one of the social media spaces, and they rejected it because my ID was without beard and I was with beard.
I'm not amazed actually by that, I must say. For a second, I was also stumped saying, oh, is it the same Vivek Karwa or no?
Even my children are saying same. Papa ye na aur koi hai.
But what's standing out in the markets? No doubt your look is standing out right now. But apart from that, which sectors do you think are shining bright in this market, given the fact that we've seen volatile moves? We saw what happened, the carnage in broader markets, particularly on Monday. But now, do you think it's the time to deploy some money?
Slowly and steadily, you should, Shiril. Say, last show also, whenever we met, I was telling that market looks overstretched, and particularly mid and small cap space. And market just requires some reason to correct, and that's the reason. And in fact, I had a lot of meetings with fund managers, and everybody were of same opinion that small cap space has really run up a lot. In fact, last year, if you see, in fact, this year, till date, if you see, almost 60% of the money has flown only into small cap funds and small cap stocks. So the market fell on its due to its own weight, and I feel that it should bottom out somewhere over here. Now, there are various issues. See, this Israel thing is still not getting over, and due to that, crude remains high. And every dollar increase in crude takes off few thousand crores from our fiscal deficit. It causes more pain. So that's the reason market is a bit cautious. And then again, we have a lot of elections and all these things coming up. So at these rates, I would feel that the large cap space really looks undervalued. More than the mid and small cap. In fact, large cap is the cheapest, second cheapest is small cap, and the costliest is mid cap still. So you should go in this manner, and you should surely deploy your money in large cap space more than your mid and small cap.
Okay, so that's the advice coming in from Vivek. Go ahead and you can start buying in a staggered manner, especially when it comes to the large cap space. But Kunal, coming to you on the technicals, do you believe that we are near to the bottom, forming a bottom when it comes to the benchmark indices? And at this point in time, which sectors are looking attractive to you?
Good morning, Srishti. Good morning, everyone. I think we are at a difficult juncture for the markets as such, because there is so much of corrections don't come by without any kind of a news flow. But then the last couple of days, the corrections in the mid caps and small caps have been very, very stark. my sense is that this is one of the better times to now start building up the larger cap portfolio. So I understand that many of the large cap stocks have underperformed, but then there is a point in the markets where there could be a juncture where the large caps may start to outperform many of the mid cap peers, even with respect to the returns as well as with respect to time frames. I think this could be a time where we may start to look out for building on more larger cap names and probably give a backseat to the mid cap ideas in terms of position sizing as well as in terms of the upside. So I think that's why I would probably believe that take advantage of this correction. It may stretch out for maybe another few hundred points on the indices, but then building up a large cap portfolio could be a good formidable strategy from current levels.
All right, so that's the strategy that you can adopt in current market scenario from both of our experts, the advice coming in. But on that note, actually, we'll slip into a break on this edition of Buy Now, Sell Now. When we come back, we will start taking your query, viewers, so don't go anywhere. Welcome back. You're watching Buy Now, Sell Now on ET Now, a show where we get you answers for all of your stock-related query. Remember, viewers, you can connect to us live on the WhatsApp number that's flashing on your screen. Do remember to mention your name each time you write to us. Mention the stock that you're looking to invest in. If you've already invested in the stock, mention the buy price, the quantity, the time horizon. In that way, our experts will be able to help you better. And talking about experts, we have Vivek Karwa as well as Kunal Bothra on the show today. And gentlemen, let's begin taking all the queries then. And the first one is coming from Narayanan. And he wants to know whether he can look to buy Hindustan Copper and UPL at the current market price, Kunal. Do you think both of these counters, which are dependent on commodities globally, are a good buy right now?
So Hindustan Copper could actually be a good buy out of the two which you've mentioned. UPL, I'm not too optimistic on the stock price. The stock tends to give a lot of false starts. We've seen the stock correcting in the last, consistently over the last, I think, 2 years or so. 2020, 21, 22 high for the stock was around 840 levels, and the stock is currently at sub 600. The concern for the stock is more of a drag in terms of the trends, and I think that's one of the major reasons why I would not be picking up UPL at least at current levels. I think Hindustan Copper could be a good bet. The stock has corrected from the recent swing highs of 170 approximately to now 145, which means a decent 15-17% correction has already happened for the stock. Could be a good territory where you can chip into the stock.
Okay, moving on, and Kunal, once again a query specifically for you. This one is from Kusuma from Pune, and she needs your input on two counters, Varun Beverages as well as Bharat Forge. What would be the good price to buy, and how does the chart look for an investment for the next 3 to 6 months?
See, I think both these stocks could be completely different in terms of the technical behavior. Varun Beverages on one hand is more of a high beta stock. The stock I think recently had jumped up to 900, 950 plus mark. It's gone through a correction in the last couple of days. Maybe this could be a correction which can extend another 40-50 points for Varun Beverages. So I think closer to 840 odd levels is where I would believe that could be a good starting point if you're looking to chip in from long-term play. Bharat Forge on the other hand is a completely low to moderate beta kind of a stock. It hardly goes into that phase of correction, and wherever the stock gets into a phase of correction, so like a 10% or a 15% drop from the previous swing high, actually turns out to be a good strategy where you may look to start chipping in. So I think both the stocks are attractive. Varun Beverages specifically around 40-50 points lower from current levels, you can start off say closer to 840. And Bharat Forge, the stock has already corrected 10% broadly from the previous highs. Wait out for another 5% correction, and that could be a classic starting point for Bharat Forge.
All right, a bit of longish question coming to you, Vivek, on the fundamental side, and the stock is Ethos. We have a viewer, Sagar, who's already holding 325 shares of Ethos from sub 900 rupees per share levels, and as you can see it on your screen, the stock has done exceedingly well for him. He's also been personally a customer also of Ethos, so he wants to know a few things when it comes to the luxury market. One, he wants to know what's your view ahead on the growth in the earnings front for Ethos in particular, and also for the overall market outlook when it comes to luxury watch segment. We all know that a lot of them, a lot of listed companies also are a part in venturing into the luxury watch segment. And also he wants to know what's the future outlook that you have with regards to the Indian markets. Do you think the luxury watch segment can deliver better returns?
Shiril, see, it's a proven data that is in all economies, developed economies. If you find that 2,500 is the per capita dollar income, and as and when that dollar income is achieved in the economy, the consumption sector actually booms. So we all have read about the Maslow's theory of human needs, wherein slowly and steadily you keep moving towards your luxury goods. Uh, what I believe is India is still a mid segment market, wherein you will find companies like Ethos and maybe Tommy is selling more than Ethos. Ethos has a customer base definitely, but for the run up the stock has had uh, and around 99 crore, 100 crore profit on a market cap of approximately say 3,800 crores today looks a bit overstretched to me. So the PE comes around 68 times. And further, if you look at the return on equity, so this is very, very important wherein people need to focus on it, is approximately 10-12% over last few years. So this makes the stock costly. Definitely, the company is going to find new and emerging buyers as the economy keeps moving up. More and more people will shift to luxury products, and Ethos is like minimum 5 lakhs watch. So the growth from here should be steady. So stock looks costly. I think you should be booking profit slowly and steadily as it goes up.
The next question, Vivek, is coming on Nestle India. Ravi from Vijayawada wants to buy Nestle in view of its stock split. And post the announcement, we have seen the stock holding itself steady in quite a volatile market. So what's your take that should he go ahead and buy a fresh in Nestle India?
See, if your idea is to buy for longer term, then yes, Nestle is a good company even today. Of course, it is on a little on the overbought, not overbought, I should say, little on the valuation side. It's a bit overstretched. But for longer term, definitely you can buy. But if your idea is to buy because of stock split, then it's a bad idea. It's like me having 500 rupees, I give it to you and you give me back 5 notes of 100 rupees each. What difference does it make? Except on the liquidity front, there is no much difference. So don't get carried away by the stock split and bonuses. This is nothing. Your value of the stock price and the value of the holding is going to remain same even after stock split. So for that reason, it's not a buy. But yes, longer term, otherwise, definitely is a good buy.
Right, Kunal, this one is from Smita and wants to know about Bajaj Healthcare. If this counter is a hold, in your opinion, her purchase price was around 478 odd rupees.
I think it's a hold. I think the stock had in the last 2 months did reasonably well. Last 3 months rather, from 300 rupees to almost 500 at one point of time. Yes, it's gone through a 20% correction, but I would still believe that the chart structure on the medium term basis looks fairly attractive for Bajaj Healthcare. Now the concern is that how quick can the stock make a near-term bottom for itself? That could be a point of concern, that maybe the near-term bottom could not be at place for the stock price, which means that it may meander at this 400 levels for at least another couple of weeks before it trends to find a major support for itself. So good chart, but then if you have a medium-term time frame, only then hold.
Okay, Vivek, the next query is from Ghosh Dada from Delhi. He's a regular viewer of our show and he's holding 10,000 shares of CG Power from a price of just 12 rupees. He's already booked huge profit in this particular name and now wants to know how is the future looking like for this one? Should he continue to hold on?
Definitely hold it on. One is power sector is actually flavor of the season. So that sector is doing good. And if you look at the enterprise value of the company also, it's approximately 57,000 crores. And the stock is exactly trading at that. Valuation wise, it might look a little overstretched because of short-term effects. But I think the new owner, TI, is it is subsidiary of TI now. So longer term, it looks good. The debt has gone down. Earlier, Crompton Greaves had many issues, but after the promoter change, the debt has really been reduced. And I find that the profit growth also over last few years has been approximately 27-28%, which makes it as a good hold. So even though you have made profit, doesn't mean that you have to book the profits and pay taxes on it. Better hold it on.
Okay, that's the advice coming in on CG Power. But with this, viewers, it's time to slip into a very short break in this edition of Buy Now Sell Now. Don't go anywhere. We'll be right back. Welcome back to Buy Now Sell Now, a show where we get you answers for all your stock related queries. And taking a look at the markets then, the Nifty 50 has seemed to be breaking below its Monday low levels, as well as talking about the Bank Nifty is also seen to be losing some of its morning gains but still holding itself in green with a gains of around 60 odd points. But let's shift focus back to taking all your stock related queries then and trying to help you with as many answers possible by our experts. And the next query that I have, Vivek, is coming from Indira, and she wants your take on HAL. When can she actually enter HAL? Any price level that you can suggest her for entry in HAL? And what's your take on this one?
You mean HUL or HAL?
HAL.
Oh, HAL.
Yeah.
See, I think defense has already played out a lot, and there is some more correction due in this space, and particularly HAL over a longer period. If you really want to enter, I think levels of approximately 1500 to 1600 would be quite comforting levels if someone wants to enter afresh. If you have time horizon of 3 years plus, then even these rates don't matter because the sector looks robust. And I think only after 6 months, again, what is going to happen in sector will be clear. So if you really want to buy immediately, I would suggest a staggered manner and up to 1500 to 1600 levels. That would be a comforting level to enter. At this prices, the stock looks really costly compared to other stocks in the defense space.
The next one is for you from Radha. Radha has Ujjivan Small Finance Bank, excess of 2,200 shares at a price of 59. Wants to know till how long can she look to hold this particular counter?
See, I think the stock has just started off a corrective phase. In fact, in the previous rally or the previous leg of the rally from August highs, when the stock was at 52, towards the recent high when the stock was at 61, 62 levels, the RSIs have been a bit divergent, which means that the stock should at least come back towards breaking below the previous highs and retesting the previous swing low. That could be closer to 47.5 to 50 levels for Ujjivan Small Finance Bank. So I think from current levels, my expectation is that the stock should come back towards this 47.5 to 50 zone before it finds any kind of a major support. So depends on how you want to trade, whether you want to add on to the quantity at those levels or whether you want to look to exit at current point and then look to redeploy money sub the 50 mark.
Okay, Vivek, the next query is coming from Sridhar, and he wants your take on Ashok Leyland holding 300 quantities from a price of 181 rupees. Quite a straight question. When can I exit in profits?
You should possibly exit only about 200. The stock in this space, particularly EV truck side, looks quite cheap to me. Compared to your industry PE also, and if you compare even with Tata Motors, I find Ashok Leyland to be better placed. And just in recent past, it had in fact from Tamil Nadu government where I am sitting, had got some 1,100 buses order, and I think this trend should continue across India. So if you look at major truck operators, the manufacturers who are also into EV are only two as of now, Ashok Leyland and Tata Motors. So it would be in fact a buy from my side, not just a hold. And when it goes above 200, that time we'll talk about it again.
All right, another one coming your way then, Vivek. This one is on Krishna Diagnostics as well as Shalby Hospitals. Balan wants to know if they are good buy in the healthcare space or should he look at some other alternatives altogether. But both of them have niche plays when it comes to the hospital space, isn't it? Or a healthcare space.
See, I'm quite bullish on healthcare space, particularly hospitals and pharma companies, not on the diagnostic space. Because diagnostic companies had made enough money during COVID, but right now it's business as usual for them. But what I feel is all services under one roof kind of hospitals. So they would continue performing well over longer periods. So it could be Apollo hospitals. In fact, if I really need to give a pick, Rainbow Children's Hospital looks quite good to me for a longer period. So you should look at this. Diagnostic companies would be avoided right now.
Okay, moving on, and Kunal, the next query is coming from Rohit. Rohit is writing to us for the first time and he wants your take on two names, whether he can go ahead and invest for a long term. Firstly is IDFC First Bank and the other stock he has in mind is TTML. What's your take? If you don't like any of these names, then any advice on any other large cap name?
See, I would believe TTML may not be a good large cap stock as such to bet. I think the stock is very high beta. I would not recommend that for a longer term play. If you're looking at it as a long term play, then I would probably recommend something like SBI Life at current levels, and that's a much better stock. And given the way insurance sector has behaved in the last 6 months to 9 months, I think this could be a good contra bet. And the other stock which you mentioned was. IDFC First Bank, of course, I think that's a quality name. You can hold on to that stock or you can look to buy even at current levels. In fact, the best part for IDFC First Bank is that the stock has already gone through a 10-14% correction. 88 approximately was the region where I would believe that the stock could, would probably take a decent support. It's just hovering around this 88 odd level, so it could be a good starting point for IDFC First Bank.
All right, this next one is coming in from Subramanian and wants to know about CDSL, 100 shares. At a price of 1,344 rupees per share. Kunal, worth holding on to CDSL?
Well, yeah, worth holding on to CDSL. In fact, we've seen how these stocks like CDSL and exchange stocks like BSC, M6, etc. have done. CDSL also has apparently been a good performer. I think in the last 2 months specifically, the stock has risen from 1150 to now 1300 plus levels. So which means that the stock has upped its pace, the supports have been rising up higher, and the trend has been more consistent for CDSL. I would suggest a hold as well as a buy.
Okay, moving on to the next query then. And Vivek, the next query is from B. Soumya. Can she buy Tata Steel and Lemon Tree at current market price for a short to medium term and any target price that is expected?
See, short and medium term, definitely not a buy because they look a little bit overstretched as of now. But Tata Steel, I can say, if you're looking for long haul, I think the company is reducing debt regularly, and that's a positive for the company. And the current tensions which are going on in the world will not make your commodity companies, though we heard about this China stimulus, all this, it is only one dose and one day rally, I should say. And then again, they'll be back to square one. So Tata Steel is a good company for a longer period. And shorter time, definitely not a good bet. Similar goes to Lemon Tree also. See, the hotel space has actually run up a lot. In fact, I remember Lemon Tree I had bought at rupees 22, 24 during COVID period and then sold above 100. So at 100 level, the stock actually looks costly even now. So if it goes below 100, you should look at it. So both are costly.
Next query is coming in from Rekha, who's writing to us for the first time. And Kunal Rekha wants your view on Camlin Fine Sciences. Wants to know about the counter for a period of 1 year, or rather she's been holding this counter for a period of 1 year. She has about at a price of around 182 rupees per share. So she wants to know, is it okay to average out average out right now and look to exit at 180 given the fact that the stock is way below her buy price as of now?
Well, I'll suggest to wait out for maybe another few weeks for the same, because what has actually happened is that Camlin Fine in the last couple of days has broken below the 200-day moving average. Now, in the previous many attempts when the stock had broken below the 200 DMA, the stock had gone through a multi-week correction. Now, on the other hand, that whenever the stock actually comes back above the 200-day moving average, it tends to give a rally of at least 30%, 20% to 30%. At least that's what we've seen in the last 3 or 4 attempts for Camlin Fine, when the stock breaks past about the 200 DMA, which means maybe in the next 1 or 2 weeks, if the stock rises back about 200 DMA, which at current levels is at 158 mark, so I think that could be a point where you may look to average higher, and then you'll get a chance to maybe exit in profits from your net holdings. If not, then at least the waiting period sustains. So I would believe that buy only about 200 DMA for Camlin Fine.
Okay, the next query, Vivek, is coming from Kiran from Pune, and she bought Poonawalla FinCorp 1,000 shares at a price of 388 rupees. In post results, we are seeing the stock drifting lower. What's the outlook going ahead, maybe for the next 3 quarters? Should she continue to hold on?
Shristi, in fact, after the run-up, I remember recommending it on your sister channel at 140 rupees. And then after it crossed 300, it started looking really overstretched, the valuations wise. Now, there are a lot of hopes that company would turn out to be another Bajaj Finance. But I should say that's a difficult trajectory and difficult task to do. It will take the company many, many years to do so. So at this valuations, after the results, though the results were good, the company has corrected because of its overstretched valuations. I find that if the stock comes by chance at 330, 340 levels, that would be again a decent entry point. But at these levels, I should give it a avoid.
Taking the note of the markets right now, Nifty has actually hit a fresh 3-month low levels. As you can see, we are actually at the day's lowest point. In fact, testing the 19,200 mark as well, just 23 odd points away from those levels to breach those levels. But 3-month low is where the Nifty has hit today on an intraday basis. And in fact, it is drifting lower, much lower from those levels as well. If you look at the broader markets, they are also off the day's highest point. Look at the small cap index is down about 1% from the day's high. Mid cap index as well is in the negative territory, while small cap is holding on to some sort of a shade of green, but mid cap is also near the day's lowest point. But let's move on to the next query coming in from Yuvraj and Kunal. This one is for you, Vivek, because it's a long-term query. He's saying that he's not taken part in the railway stock rally. Now he wants to know which is the 2 stocks in the railway pack that he can look to buy right now at a correction. He wants to know price as well, but I'm not sure if you can help him with the right price for it. But do you think now you can venture into the railway stocks after the spectacular rally it's seen and seen some sort of a correction, or do you think some more correction is warranted before entering these railway encounters?
We'll wait for some more correction in railway space, because the stocks had doubled, tripled also. In fact, some stocks went even 4-5 times. And I'll tell you, these are companies wherein a lot is dependent on the way government works. And you keep in mind, another 6 months we have elections, and after elections things would be more clear what sort of government comes back to power in Delhi. So if there is some disturbance over there, I'll say this stocks can correct even by 50%. So you should be really cautious at these levels. Though these stocks have done well, I find that you should give it a skip as of now. Wait at least for 6 months and then re-enter. They look costly now.
Right. In fact, this morning we also had Ravi Dharamshi on the show and on the channel, and he also spoke about the same thing, talking about the railway counters and defense counters, where he's trimming some of the exposures. And yes, political risk also weighs heavy on these counters, isn't it, Shrishti?
Well, yes, so that's the advice coming in for all our viewers then when it comes to the railway and defense counters. But with this, viewers, it's time to slip into a very short break. Don't go anywhere, we'll be right back.
Welcome back. You're watching Buy Now, Sell Now on ET Now. Let's continue taking your queries. The next query that I have is coming in from Balan. Kunal, this one is for you. Balan has Karnataka Bank, where he has 10% profit in that particular counter. He has Bandhan Bank, where he's seeing a 10% loss. Aditya Birla Capital also 10% loss, while Canara Bank 15% profit. Now, out of these counters, he wants to know which one should he move out and which one should he stay put with, or do you think stay put with all 4?
So I think Bandhan Bank is the only stock which I would believe that you can probably look to exit. The stock has been very weak in terms of the chart structure. Even the last 2 months of the price rally for Bandhan Bank, the rally could not lead to the stock making a new high for itself. So that's the only stock which I would believe that you can tweak. But the other 3 names, I think you should continue to hold on.
Okay, Vivek, the next query is coming from John, and he's holding 3 FMCG names and wants your advice on these. Firstly is Emami, 100 shares from a price of 434 rupees. Marico, 100 shares at a price of 462 rupees. And Dabur bought 100 shares near to the current market price as 531 rupees. He's been holding these stocks for the past 1 to 2 years and in profits for Emami and Marico, while almost a flattish return for Dabur. So how to manage these scripts? Any advice to booking out profits in any of the names? How are the valuations stacking up?
See, the valuations are, I should say, on the fair side, and I would go with the stocks in the same order which you mentioned. So the first preference would be Emami, the second would be Marico, and third Dabur. All 3 are, I should say, mid-range FMCG companies, and being festival season over next 3 months, I think this company should really do well. So you should hold it on. And possibly after the festival season is over, then we'll have a relook. But as of now, they are likely to do good.
Right, with that, let's start with the rapid fire. Then, Kunal, the first one coming your way from Pratiksha wants to know about United Breweries as well as United Spirits. Both of these counters, she's making good profit. She can hold for 3 months. Do you think that makes sense to stay put and not exit?
I think you should look to book profits over here.
Kunal, SV Rao is holding Som Distilleries from a price of 315 rupees. What's the target for the next 6 to 9 months?
Targets for the next 6 to 9 months could be closer to 360.
All right. RK has a query for you, Vivek. You did say that defense and railways do have political risks also along with them. Wants to know what should he do with his current holdings. He's already making about 40 to 50% profit in these counters that he's holding. A heavy investment is what he has. Should he book out some partial profits right now?
See, the political risk is highest on the railway front. So if you are holding railway stocks, I think you should book profits fully. And if it is defense, I think you can hold on.
Kunal, Imtiaz wants your advice on Astral holding 50 shares from a price of 1976 rupees. What to do in this one?
I would suggest to just hold on to the stock, no need to add further.
All right, this next one is coming in from Satya. Wants to know about PNC Infra and HG Infra. Right time to average right now, Kunal?
Not really, I would suggest to wait out.
Vivek, Saroja is holding shares of Godrej Agro with 125 stocks from a price of 535 rupees. Can continue to hold on for the next 3 to 5 years. How are the prospects looking?
See, the company is good but doesn't move. So I don't know what kind of opportunity loss you're going to have if you are going to hold it. So better buy some other FMCG companies than this.
All right, Sitaram Ganesh Kunal has Keval Kiran Clothings. He's making decent profit in this particular counter. What should his strategy be? Should he exit?
Book profits and look to enter re-enter closer to 700 mark.
Vivek Ramachandra holding 30,000 shares of Yes Bank from a price of 19 rupees. Will you advise for a sell, switch or hold on?
No to Yes Bank.
All right, this one is coming from Rahul. He wants to know if Ujjivan, IDFC First as well as Jio Financials are a good buy for the long term. What's your take, Vivek?
Can you repeat the stock? Sorry.
Ujjivan, IDFC First Bank as well as Jio Financial.
Jio Financial, I have personal holding, so it's a buy. IDFC First Bank is a buy. Ujjivan, I think you should avoid.
Okay, but with this, viewers, it's time's up on this edition of Rapid Fire Session. Thank you so much, Vivek, for joining us and helping all our viewers with their stock-related queries. And thank you, Kunal, as well. And goodbye to you as well, because viewers, Kunal is going on a holiday. So we might catch up with him in a couple of weeks from now. But definitely, all your stock-related queries will be answered in the Buy Now, Sell Now show. With this, it's a wrap in this edition of the show. It's a goodbye from me and Cheryl and the entire team who put the show together. Thank you so much for watching.